For 22.4, we have 3 different sets of information that we are journalizing. Adjusting entries, closing entries, and reversing entries. We're going to start out with We're going to start out with adjusting entries. And remember, all of this information is coming from our worksheet. So adjusting amounts come from the adjustments column. So our date for all of these is going to be December 31st. We need to label this very top column as adjusting entries. And then our first one will be interest receivable. And $275. Second line of that one is interest income. Credit of $275. Next line, our date's the 31st. We have uncollectible accounts expense. And a debit of $7,350. And a credit of allowance for uncollectible accounts. So $7,350. 31st is the date again. And merchandise inventory. $25,800. The credit with that is income summary. $25,800. Next adjustment, the 31st. Supplies expense. Debit of $2,300. Next line is supplies. Credit $2,300. Next adjustment date is the 31st. Insurance expense. Debit of $6,000. Credit will be prepaid insurance. $6,000. Next line, 31st. Depreciation expense. Office equipment. And it's a debit of $2,800. Next line is accumulated depreciation office equipment credit of $2,800. And the 31st again. Our date is depreciation expense store equipment. Credit of $1,760. And matching is depreciation. Accumulated depreciation, store equipment, credit, $1,760. 31st, interest expense, debit of $555.16. Interest payable for the credit account, $555.16. And then our last adjustment is the 31st. Federal income tax, $1,752.70. And the credit is federal income tax payable. Credit $1,752.70. Okay, so that was our adjusting entries. Now we are moving on to closing entries. And while all of this information does come from the worksheet, you just have to kind of know and memorize what has to be done for closing entries. So first we are going to label it closing entries. Our date is December 31st. And then we have several accounts here that go together. So our first one will be sales. And it's a debit of $1,075,868.30. So if we go back here to the instructions to look at that, so here's sales 30. It's actually in the credit. So on closing entries, you journalize them as the opposite of what they are on our worksheet. So opposite is what you need to remember. So then our next one is purchases discount. And it's a debit of $5,483.60. Next line, purchases, returns, and allowances. Debit $2,716.14. Next line, gain on plant assets. Debit of $110. Then we have interest income. Debit of $1,169.48. And then our credit will be income summary. And so we add those all together. And we get $1,085,347.52. And that's our first closing entry. Then our next one here, date is the 31st. Our first debit account will be income summary, but we won't know the amount to put in there. We have to do all of our other closing entries and then we will add them up. So then we have sales discount, credit $2,020.80. Sales returns and allowances, $8,347.20. Then we have purchases, $737,464.80. Next line is advertising expense. Credit of $15,947. Next is cash short and over. Credit of $9.15. Next is credit card fee expense. Credit of $10,066.94. Depreciation expense office equipment. Credit of $2,800. Depreciation expense store equipment. $1,760. Insurance expense, $6,000. Miscellaneous expense, $8,682.20. Payroll taxes expense, $14,966. Rent expense, $28,915. Repair expense, $3,485. Salary expense, $158,964. Supplies expense, a credit of $2,300. Uncollectible accounts expense, $7,350. Utilities expense, $2,661. Interest expense, $2,741.30. Loss on plant assets, credit of $248. And our last one here is federal income tax expense. Credit of $21,052.70. Then we have to add them all up. And back here on line 8 for income summary, we get a total of $1,035,721.69. Okay, our date is the 31st. Okay, so my next closing entry deals with my net income or net loss. So we will have income summary and a debit of $75,425 and 83 cents. The credit account is retained earnings. Credit $75,425.83. And then our last closing entry is the 31st and for dividends. So retained earnings, debit of $43,200, and then the credit is dividends, $43,200. Okay, that ends part 1. I'll just do a short recording for part 2 for reversing entries.